episode of Traders TV. In today's episode, we're going to be talking about how to use a trade journal, a key part in helping you become a much more well-rounded trader by understanding your wins, but also your losses as well, which are always part and parcel of trading the financial markets. So let's get started.
So what is a trade journal? Well, a trade journal is simply a record of your trading activity. Now, Smart Charts provides this for us and we can see our previous trades, but I also like to take it one step further, and I like to record the trades not only that I take and the trades that win and lose, but also the trades I decided to stay out of. Because remember, trading is about making a decision. Should I take a trade? Should I not take a trade? Really what we're looking for is a quantifiable edge. We're just looking for an edge in the market. We're not always going to get every trade right. Not every trade is going to be wrong either. Okay, it's made up of wins and losses. We're just trying to get an edge in the market so we can try to come out on top, or just at least slightly ahead. So a lot of traders use a trade journal to keep a record of their trades, to try to identify, patterns of success, but also patterns of failure as well. Because there's a lot of traders out there that will keep on trading and they just keep on losing, and they have no way to review what they're doing. You need to have a barrier to your trading where you have the ability to take a step back and say, hey, this is not working for me. I need to redo things. I need to look at things properly now, okay? Or I need to, consult a professional, whatever it may be. And it's important you have those barriers because there are no other barriers to trading. So you need to have a trade journal where at least it acts as a barrier for you to record your trades before you even take the trade. So this is where we keep our watch list. So that's another good barrier as well. We're not just trading what we think is going to happen. Yeah, we're not just gambling. We have a watch list of the markets that are in trends right now, and within that watch list, we keep it in our trade journal. So then we've always got that to hand. So at least we have some kind of focus, some kind of preparation before we even step in to the trading arena. It's also important as well to look back historically and see what has been working for you, but also what hasn't been working for you, to try to find out where you need to work on for the week ahead or for the month ahead. And this is an example of a trade journal from a student, and simple things like the date, the market, the trading, the direction, long or short, the trade reasons, so the trade strategies. And in this particular case, this trader was struggling with impulse trading, taking trades that, didn't meet their rules of their particular strategy that they are trading. So, they were struggling with taking impulse trades. So this journal was focused on helping them identify patterns of, when those impulse trades would come around. And it's this kind of level of analysis that is really important for a trader's journey. And we do this just to give us an insight in terms of where we are in our trading and where our strengths and weaknesses are. So the job of having a trade journal and reviewing our trades is not to try to turn every losing trade into a winning trade. And that's a common mistake that a lot of people do. They look back at their losing trades and they think, oh, well, if I change this, that, and the other, it will turn into a winning trade. A trader who does that has failed to accept the fact that trading is not just about winning, it's also about losing, okay? And sometimes you may lose more times than you win, and that's just going to be the name of the game. But the key thing to identify is whether or not what your process, whether or not that's working for you. Okay, sometimes we're going to get stopped out on a trade because of the volatile news event, some unexpected events that aren't even on the economic calendar. But this is also why we have risk management principles, and that's why we use stop losses as well. So the risk management part is really the most important part of a trader's journey. But a trade journal can potentially be helpful in quantifying those patterns of what the trader needs to work on.
So now you know a little bit more about how to use a trade journal and how it can help you. If you want to learn a little bit more about Learn to Trade and who we are, then click on the link below. I'll see you on the next video.